I'm Charlotte McLeod with the Investing News Network, and here today with me is Maria Smirnova. She's Senior Portfolio Manager and Chief Investment Officer at Sprott Asset Management, which is a sub-advisor to 9 Point Partners. Thank you so much for joining me today. Great to see you.
Great to see you, Charlotte.
Nice to be catching up with you. It's our first time talking in almost a year. So what I wanted to do just to begin is to look back at gold in 2022 and ask you about its performance, any takeaways that you would highlight for investors.
Well, I think gold proved to be a safe haven last year. As your investors will know, a lot of the markets last year had a rout from just the general stock market. Technology was down a lot, and the bond market was down. Cryptocurrencies were down. Gold stood its ground and basically was flat on the year, around $1,800. Now, there was volatility within the year, but it ended at the same $1,800. And, if I may bring in silver, it actually was up 3%. So both metals quite handily outperformed. And they outperformed analyst expectations, I might add. Some analysts were predicting gold at 1,500, at 1,600, and like I said, it ended the year at 1,800. So despite everything that was going on in the markets, it was a good place to be, and that made me very happy because it proved that gold indeed is a portfolio diversifier, and everyone should have a holding in gold.
Okay, great summary of gold last year and silver as well. Thank you for bringing silver into that. So as we look forward into 2023, I think that a lot of investors are looking very closely at what the Fed is doing, especially after it's managed to hike interest rates a lot further than many people expected, at least initially. So we're going to look at the Fed, but before we talk about that, I wanted to ask you if you could outline what data points the Fed itself is watching so that we can better understand what it's looking for when it makes its decisions.
So I think that two primary areas of concern to the Fed, well, of course, market stability, but the two things they watch are inflation and employment. And of course, last year was all about talking about inflation, food, energy, durable goods, everything spiked. And that was the focus. And on the employment front, right now, unemployment rate seems to be very low. The job numbers seem to be strong. So I think from that perspective, that is why the Fed has been hawkish, trying to stomp out inflation and, while maintaining a rosy economic outlook.
And so if we look forward into 2023, keeping those things in mind, what do you think the Fed's path will be? Because there's so much speculation about that. I think everybody is really curious to what we might see.
Well, of course, I don't have any insights as to what the Fed is talking about internally, but I do read the press releases. So I know that they watch the economy closely. And of course, market is expecting a couple more interest rate increases and then a pause. In Canada, of course, we've already paused, but in the US, we're still expecting a further increase in interest rates.
Okay, and one of the things that people are really wondering about is the Fed going to be successful in engineering this soft landing that it hopes to provide? What are your thoughts on that? I know, as you said, it's difficult to say, but we can get some clues based on what they're saying, maybe.
Well, I'm personally in the camp that we're not going to have a soft landing. And of course, there's a lot of debate about that. And you're hearing the word recession more and more lately as it pertains to the US. But, from all my readings, there are three factors that in the past have led to a hard landing, I believe, every single time. And they are central bank tightening. Of course, we've had that in spades. We've had one of the most aggressive interest rate increase cycles, and of course, since the 70s, 80s. The second one is food and energy inflation spiking. We certainly have had that. And the third one is banks aggressively tightening lending standards, and we are seeing and reading about that. So again, those three factors historically have always led to a hard landing. So that's why, I'm in that stance that we're not going to get out easy. And I think there are some warning signs that are pointing to a deterioration already in that direction.
Okay, thanks for laying that out. I think that helps us see really clearly why we might be going down that path. I think for many investors, they are looking at this scenario and they want to know what's going to happen with gold in this scenario. So maybe we can talk about that a little bit, how gold may perform in this environment that you see coming.
Well, again, I will say that to me, gold is not necessarily an inflation hedge, as some people think, but it is a safe haven. And last year, one of the things that hurt gold was a strength in the US dollar. Um, and going forward, I think that we actually, we think that the dollar has potentially peaked, and we've already seen a weakening late last year in the dollar. So that's kind of one of the factors. And so I think from that perspective, gold will benefit. But also, when we have a weakening economy, gold generally, again, benefits as a safe haven. So because we're thinking that the economy will deteriorate, and I can go into more details why I think that and what to watch for, I think gold has a really good outlook.
Yeah, maybe we can go into some of the more details there and talk about more of the outlook for the US dollar, because I know that people were watching that also very closely because it's been a headwind for gold recently.
Mm-hmm. So again, the dollar strengthened last year because one of the reasons was a relative strength, or the differential in interest rates between the US and other countries. And of course, the Fed hiked rates more aggressively than in Europe and other countries, and so the dollar benefited. But on the other hand, one theme we're watching is something called de-dollarization, and that is central banks around the world trying to diversify their foreign reserve holdings away from the dollar into other currencies, but also into gold. And so a big theme in gold has been central bank buying. We saw it it was very strong last year, particularly in the last quarter of the year. We saw a big spike in central bank gold buying. In fact, last year, and I don't want to muffle up the numbers, but the year was very strong. Hang on, let me pull it up. Yeah, Q3 and Q4 were at the fastest pace since 1967, so literally in many decades. Again, that is governments trying to shore up their foreign exchange reserves. And another reason is what happened in Russia in February, so a year ago. Wow, it's been a year. When Russia invaded Ukraine last year, the West put on sanctions against Russia foreign reserve or US holdings, US dollar holdings. And so Russia could not use their foreign reserves. And so other countries are looking around and saying that can happen to us if we do something the US and the West does not like. So what do we do about that? And one of the things they're doing, like I said, is buying gold. China has been a very aggressive buyer of gold, particularly at the end of last year. And I'm not sure why the timing lined up, but that's what's happened. And other central banks in Asia and kind of Eastern Europe have also been active.
Do you anticipate to see more central bank gold buying in 2023? I know people have been really paying attention to that, and it was kind of coming as prices were lower. Now we've seen at least a little bit of an uptick in the price. So how does it look for you?
I think, something like central bank buying is less less price sensitive potentially because, countries have pretty much not unlimited resources, but a lot of resources. So it's not like me going out and trying to buy a bar of gold. So I think it's the greater themes that are driving that trend that will continue to drive that trend. Um, and I think it is a trend. So I think it will continue.
I think that makes a lot of sense. So we have an idea now of what's going on with gold potentially as the year continues. Let's move over to silver, which is always really interesting to discuss. It's got its investment side, precious side, and its industrial side as well. So I'm wondering for you, which one do you think will be the more dominant in 2023?
Well, I can't pick favorites. Silver is a very interesting metal, obviously for its characteristics and for the fact that it's about half and half in industrial and monetary use, or investment use, I should say. Um, and so I view the industrial side as the backbone of demand for silver. And of course, we can go into where the growth has been, namely the energy transition side of things, where the world's moving towards alternative energy sources, and solar plays a huge part in silver for that, and that area has been growing. Um, and then electric vehicles, of course, and as we transition to electric vehicles, the use of silver is increasing. Now, on the investment side, that's where the marginal dollars can really move the price of silver. And, we've had a lot of outflows out of ETFs, for example. I believe the number for last year was something like 120 or 130 million ounces in a 1 billion ounce market, for reference. So it represented over 10%. So that's a big outflow. But despite that, the silver fundamentals are very, very strong. Um, Again, the bar and coin sales were strong last year. India was importing record amounts of physical silver. So the investment side was actually strong last year, despite the fact that we saw outflows in ETFs. What hurt the price was the speculation on the COMEX. And the speculators last year had declining net positions, which meant that they were depressing the price. So I think that's kind of the thing that pushes the price around. But in reality, like I said, the physical market was very, very strong. And as a result, we saw outflows in inventories of about 400 million ounces, according to the Silver Institute. I know I'm throwing out a lot of numbers and information, but all I'm trying to say is that the strong demand supply led to an outflow in inventories, and that's very positive. And that's probably one of the reasons why the silver price did really well last year, plus 3%. Um, and now it's come off a little bit now, but there are fluctuations within the year. And so I just think that the silver market is very strong given the outlook for its fundamentals.
And do you think in 2023 we may see the price move higher? Because I know a lot of people are really wanting to see a breakout, which really we haven't quite had yet.
Well, again, we're still in that environment where we're expecting a further increase in interest rates. Everyone is watching what the Fed's doing. So there's a bit of hesitation, right? So I think that my answer will be depends. If India continues to buy, that'll definitely provide support. We know that the industrial side will continue being strong. Again, energy transition is away from fossil fuels is not going anywhere. In fact, that theme is accelerating. And so we know that that will provide a support for the silver price. And so I think the swing factor will be that investment demand from the West, and when we've had inflows into ETFs, strong bar and coin demand, we know that the silver price can fly, right? So I think it won't take much. It's not a very big market. And so I wouldn't be shocked if we had a nice run in silver, but we have to get through that, anticipation of high interest rates and seeing, when will the Fed pivot? I think that's what the market is waiting for.
Okay, no, very helpful to know what at least we're looking for. If we move on now to look at the gold and silver stocks, I want to ask you where you see the most opportunity right now. I think when we spoke previously, you had mentioned explorers, mid-sized producers. How are you feeling right now?
I still think that is the space to be. We're true believers in the small to mid cap space, for several reasons. Number one, when you're smaller, you can make more of an impact with a discovery. And I'm a big believer in exploration, as you know. And I think that has not changed. I think we need more funding to go into the ground and for, to explore for new discoveries. The second reason being is that normally bigger companies buy smaller companies. And we've seen, examples of that. Consolidation in the gold space is continuing. We've had a couple of announcements recently. And again, it was a bigger company going after a smaller company. So I think that that provides an additional potential lift. Now, recently, the smaller caps have underperformed the large caps. But again, we haven't been in that roaring kind of gold and silver prices are moving higher. You have to be there. We're kind of in this pause in the bull market right now. So I'm not worried, but we are maintaining our stance that small to mid caps are the place to be for us.
Okay, and among the companies, they have faced some challenges. We've seen inflation without higher metals prices that might help these companies a little bit. What do you see as the challenges that precious metals companies of any size are facing this year?
Well, I think number one, it is reserve and resource replacement. That and production maintenance, even so the bigger companies are struggling to maintain production, never mind grow it. That's number one. So like I said, we need to put more money into exploration. And the second one I would say is inflation, right? As you mentioned, it's affected many different industries, and the miners have not gotten away from it. Now, what we're hoping for is a moderation in inflation. In other words, we've seen the impact of higher energy prices. We've probably seen already labor increases, and we're hoping that things stabilize going forward and that companies are able to tighten their belts and stop or at least slow down the creep in costs. So those are, I would say, are the two big things.
Okay, so a little bit of a challenging year still ahead, but we'll see how it goes. I think this has been a really good summary of what's going on in gold and silver and also among the companies. So as we're wrapping up, are there any points that you would add for investors to consider at the moment?
I would say that overall, if you think about the longer term trends, mining equities are still at low, valuations. So it's not a bad time to enter the space, and we are seeing some interesting developments in the space. And like we've talked about in the past, companies have been more fiscally responsible. They've tried to pay down debt. They've increased their dividends and started doing share buybacks. So that shift from growth at any price, that's done. The shift has been from that to, like I said, watching the balance sheets, strengthening the balance sheets, and making sure that the businesses are more, um, you know, financially stable and responsible than in the past. And there's been a lot more emphasis on governance as well. So I think there's been some very positive developments in the industry that are not being recognized right now. So from that perspective, we're encouraged as to the outlook for mining equities. And of course, as we've spoken about, we have a very positive outlook on gold and silver bullion prices. So between those two, we're pretty confident that there's some good returns to be had going forward.
Okay, I think that sounds like a pretty positive place to wrap it up. So thank you so much for coming on to talk about what's going on with precious metals.
Thank you very much for having me, Charlotte.
Of course. And once again, I'm Charlotte McLeod with the Investing News Network, and this is Maria Smirnova with Sprott Asset Management.